Next up, I am pleased to introduce Keith Stauffer, Chief Financial Officer of Terrascend Corp. Terrascend shares are traded in Canada under the ticker symbol TER and in the US under the ticker symbol TRSSF, with shares up 92% year to date. Keith and the Terrascend team have built a strong portfolio of US assets that span some of the most attractive US markets, including Pennsylvania, New Jersey, and California. Its US operations are experiencing fantastic momentum, with Q2 net revenues rising 36% quarter over quarter, and US operations now contributing to 90% of net revenues. As one of the few companies operating at scale in both Canada and the US, I'm sure we're all looking forward to hearing Keith's unique insights into the contrast between these two markets and how Terrascend was able to achieve a successful transition into the US. I would now like to turn the call over to Keith to tell us more about Terrascend and the opportunities ahead. Keith, please go ahead.
Thank you, Andrew. Hello, everyone, and excited to be here today and looking forward to giving you a brief overview of Terrascend, talking about some of our success to date, our platform and our operations and our path forward, and then I think we'll open it up to questions from there. Okay, there we go. So just starting out, it's interesting because this company was really only formed a little over 3 years ago as a Canadian company, but the key investors, two of which are Jason Wild from JW Asset Management and Canopy Growth, I think quickly recognized that there's a massive market in the United States. And so in late 2018, the company reorganized and paved the way to a few different key acquisitions for the company. The first being the Apothecarium on the West Coast in California in midway of last year. And then a few months later, the Ilera Healthcare business in Pennsylvania. And also during that period of time, the company won a vertically integrated license to operate in New Jersey. So in a very condensed, quick period of time last year, or dating back to late 2018, the company really became the makings of a US MSO. And then late last year, Jason Ackerman, our current CEO, joined on as executive chairman. And just a few months ago in mid-April was named permanent chief executive officer of the company. So that's another key milestone. We received some additional financing from Canopy Growth in March of 2020. And then really from that point forward, it's been all about expansion. And in Q1, we completed the expansion, tripling the capacity at our Pennsylvania operation, which Andrew just mentioned. We really realized the full benefit of that capacity expansion in our Q2 numbers, which I'll go through in a bit. And then we also will be expanding that capacity further, and we're also expanding our capacity in California. So that's just a bit of a history, and I'll walk through in more detail now. In terms of our strategy, it really starts with customers, delighting the customers, and the Apothecarium brand in particular, and that experience. They're very well known and have been operating for about 10 years in California with that experience as their ethos. The second key strategy has been all about depth in attractive markets. And so we'll talk a lot about Pennsylvania and New Jersey being two very attractive limited license markets. And we'll be looking for more as we go in terms of a M&A strategy. But our strategy number 2 is really all about depth in attractive markets. We're vertically integrated wherever we operate, and in places where we weren't as vertically integrated, like in California, we've expanded our cultivation presence with State Flower to become more vertically integrated, which helps us drive scale and profitability. The fourth key strategy is all about operational excellence and financial discipline. And it's really been with Jason coming on board a few months ago, and then myself as well, a couple weeks after Jason, we're really taking the company and making it not just a collection of acquisitions, but really an operating company. And so everything we do is geared in that direction. And then finally, and this is a really important part for the future, really building industry-leading digital and data capabilities. Jason Ackerman founded FreshDirect 20 or so years ago and built an online grocer over that time period. So he has a lot of expertise, a lot of vision, and a lot of passion for doing the same in this industry. In terms of our footprint, like I mentioned, we have an East Coast operation and a West Coast operation. That's the way we like to really think about it. There are management hubs to go with each. And on our East Coast, we have our Pennsylvania business, which is by all accounts the #1 wholesale market share business in the state of Pennsylvania. It's an attractive population in terms of states, limited license, as I mentioned. And we have a scaled business there already. So we tripled the capacity, like I mentioned. We have 3 opened retail dispensaries, 2 of which were opened just recently in the past 2 months, and they're still ramping. And we are completing the work on additional capacity on top of the tripling that will come online. It'll be another 25% capacity that comes online in our Q4 of this year. So a lot happening, and it's a great business. It's highly profitable and one with some very favorable dynamics. And then secondly, we have our New Jersey business, which is just coming up online. We just planted our first seeds several weeks ago, and we'll be seeing the business generating revenue both from a cultivation perspective as well as our first dispensary in the state of New Jersey in Q4 of this year. And then finally, if we move to the West Coast, we have, again, the Apothecarium brand of dispensaries that we acquired last year. We had 3 operating dispensaries. We just opened up our 4th in Berkeley, California, and we have plans to open our 5th in Q4 in Capitola. They're very favorable in terms of retail sales metrics. The experience that patients experience and customers experience coming into the stores is really award-winning in terms of the feel, the focus on the patient and the customer, and it's just a really great business with a great team out there. We also have, as I mentioned, we've expanded our State Flower brand and Valhalla Manufacturing brand, which are gummies and chocolates, and that's part of our West Coast business as well. Just a quick double click into Pennsylvania. We have the state is really attractive in terms of the patient counts, almost doubling in 1 year. The dispensary account also projected to double. There's the capacity for the state to open up to 186 dispensaries, and they're only in the high 80s at this point. By the way, Terrascend, our layer business, sells into about 90% of those dispensaries at this point. The list of qualifying conditions in Pennsylvania is very favorable, and it includes anxiety and pain, which are it drives a lot of business. And finally, it's a limited license market, but with New Jersey on the ballot in terms of a rec vote, there's a lot of talk out there in the sector with New Jersey, high probability moving to recreational. Then you have bordering states like Pennsylvania that would also be a favorable backdrop for that to happen as well. Looking at New Jersey in terms of attractiveness as a state, again, limited license. We have our site in New Jersey, which can expand up to 240,000 square feet over time. We're currently working on phase 1, what we call really phase 1 and phase 2, which is one is an outdoor greenhouse. The second phase is indoor, and the total of that would be about 140,000 square feet. And again, like I mentioned, that's all scheduled to come online in just a couple short months and start generating revenue. And then just a view into our West Coast business. Of course, the California market is the largest market. We operate with a very strategic focus in the northern part of California. The apothecarium dispensaries are concentrated in greater San Francisco area. Like I mentioned, we just opened up a fourth dispensary in just a few weeks ago in Berkeley. And then we're scheduled to open up our fifth dispensary in California in Capitola later this year. We have a couple of other businesses that are smaller in our portfolio. One is a hemp CBD business called Arise Bioscience, which has national distribution. Again, it's a relatively small business, and we're focused on a new line of products. We have a Funky Farms brand, and we have Original Hemp brand, two of our key brands there. And it really gives us optionality into the CBD space, but is not a large part of our focus in terms of our MSO strategy with THC. And then finally, we have where it all started, which is a Canadian LP business. We have a Haven Street brand. Again, Canada is not a large part of the business. Our US business is 90% of our revenues. But we have focused a lot on making this business more closer to break even and less loss making. And also we have the optionality here to expand further in Canada once the dynamics become more favorable between the supply-demand balance. I mentioned some of these activities, but this is our growth agenda throughout this year and into the first half of next year. Just to walk through that briefly. In Q1, like I mentioned, we tripled our cultivation capacity in Pennsylvania. We have in Q2, that came online for a full quarter. We also opened a second dispensary in Pennsylvania. This quarter, we received approval from the Department of Health in New Jersey for the planting in our New Jersey operation, as I mentioned. We opened two new dispensaries that I outlined in Pennsylvania and California. And then in Q4, we have the additional 25% cultivation increase in Pennsylvania that will be coming online. And then finally, we have a few more dispensaries that will be opening in Q4 in California and New Jersey. And as we go into the first half of next year, our New Jersey business will be ramping up significantly. So we'll have all that cultivation and processing coming live into next year. We'll also have two, in addition to our first dispensary in Phillipsburg, New Jersey, we'll have two new dispensaries that will be opening in the first half of next year in New Jersey. And so why Terrascend? I explained a lot of our background, a lot of the platform, the assets that we have. When you look from an investor standpoint, we've really, like I started out saying, in a few short years, starting as a small player in Canada, we've pivoted quite quickly and quite dramatically into becoming more or less a top 5 US MSO across key financial and operational metrics. So if you look at our adjusted gross margin in Q2, 56%, that puts us number 2 in the industry. If you look at our SG&A leverage, it also puts us in the top 5, 33%. I'll show you some trends on that in a minute. We turned our first profit at the EBITDA level in Q1. In Q2, we repeated that and more than doubled our profit at an EBITDA level. And finally, our EBITDA margins expanded quite significantly from 14% in Q1 to 24% in Q2, which is also up there among the industry leaders. If you look in terms of size and revenue growth ranking, again, quite dramatically over a relatively short 1-year period, we've jumped up the rankings from number 17 a year ago. And now that I think all the leaders have announced their Q2 results, I think we ended up at number 7 in Q2. So quickly becoming close to a top 5 competitor, not only across financial profitability metrics, but also in terms of size. And so just to reiterate our strategy, we're really focused on customers, on building a world-class team. Like I mentioned, Jason Ackerman as CEO. I myself started a few months ago. We've hired several people since then. And so we continue to focus on building a world-class team. We have a strong set of values in terms of operating discipline. We have financial discipline as well. And then I mentioned earlier, the fifth prong of the strategy is all about leveraging data and technology. And here, just to reiterate some of the numbers, you see in the top left, the revenue numbers, I think, speak for themselves. The gross margins have been scaling quite dramatically. We expect that to continue forward as we continue to expand in our most profitable Pennsylvania and New Jersey businesses. The EBITDA you see here continues to scale. We have a strong balance sheet that we believe will take us through our key investments through the remainder of the year and into positive free cash flow territory. Our OpEx will continue to scale. You see the numbers there from 65 to 33, and that improvement will continue over the next few quarters. And we also, last but not least, we announced our first positive cash flow from operations in our Q2 results last quarter. And so I'm going to skip over this. I was going to say I'd be remiss to not mention some finance initiatives since I'm the CFO of the company. So we do have quite an aggressive agenda underway for that. I will skip over the team, just recognizing that we want to get to Q&A. And I'll finish up by saying that we do have two key partners in all of this, one being Jason Wild Asset Management, the second being Canopy Growth. And these two key players, I think, give us not only strong industry knowledge and leadership, but also a very strong flow of M&A deals and also strong capital partnership. So with that, I will turn it back over to Andrew to open it up for questions.
Perfect. And once again, to our audience who have joined this call on Zoom, you are able to submit questions through the Q&A function of the Zoom platform or by emailing myself directly. Keith, I'll start this one off. I just wanted to get your sense, looking at the catalyst ahead, what are you most excited about for the second half of this year? You mentioned cultivation expansion coming online in Pennsylvania. You have your New Jersey operations coming online. You're expanding your branded products in California and your dispensary network there. Which of these opportunities are you most excited about?
I think really it's just to reiterate how well we're positioned in the Northeast. So if you take Pennsylvania and you take New Jersey, those are two, I think most would agree, those are two of the most attractive states in the country in this sector, and we happen to be very well positioned in both of those states. So, and most of the investments have been made already. So it's really, we're at this point where we're pivoting from making the investments to actually realizing the benefit of those investments. And so that's really the most exciting piece to this, and that will take us out through not just the next few months of this year, but really through 2021 with all of that occurring. And that's even without mentioning anything about the regulatory changes that are probably coming our way in those two states and adjacent states to those two states. So I think all of that bodes very well and is extremely exciting.
And Keith, I just wanted to build on that last point there, the potential regulatory changes coming to those states. What's your view on the ballot initiative in New Jersey for this November? And do you foresee Pennsylvania following suit if New Jersey is one of the first dominoes to fall within that eastern region of the U.S.?
Yeah, so first thing is we are 100% focused on executing within what we control. So we have our hands full in terms of being prepared, especially in New Jersey, getting that operation up and running, meeting the consumer demand. So we're extremely focused on executing with our current business. With that being said, I think everybody that's sort of well informed in the industry can see the surveys, and it looks pretty favorable in New Jersey in terms of 60 to 70% favorable, somewhat favorable, et cetera. And then there's a lot that's been written about the domino effect of that, and just sort of logically looking at it. And with those states bordering each other, New York, Connecticut, New Jersey, Pennsylvania, it's probably more a matter of when rather than if with these states in the Northeast.
Thank you for that. I would like to just get a little bit more insight into the Pennsylvania market as well. We've seen this strong performance in Q2 for yourselves and some of the other operators in that market. I believe the market run rate sales now have exceeded what some market forecasters were expecting years from now. So there's been tremendous growth there. What are you seeing on the ground? What's driving that improved demand? And can this impressive growth continue?
Yeah, I think there are several factors. I think one I mentioned, which that in terms of the favorable indications for patients. So favorable from a manufacturer standpoint in terms of anxiety, pain. I think that's driving patient counts. So that's really the first thing. And then the second is the dispensary count numbers that I showed earlier, where you still have a lot of runway with dispensaries that are going to be opening, and so that dynamic will continue to unfold in Pennsylvania over the foreseeable future, coming months. So I think both from a patient standpoint as well as the balance between having enough doors open across the state will continue to play out.
Thank you for the additional details there. And just want to ask a question from the audience now, and perhaps build on it a little bit. Where we see some of these US operators being vertically integrated, there's obviously this question of how do you choose to supply your own stores versus the wholesale market? So when you look at a market like New Jersey, where you are vertically integrated, what kind of, how are you allocating the capacity you have there to your own dispensaries versus, some of your peers in that market?
Yeah, maybe Pennsylvania is a better example because we're still getting up and running in New Jersey, so we're not quite there. And also the dynamics will be different because the store count in New Jersey is still less developed. So we'll be out of the gates in New Jersey. We'll be much more of a wholesaler. And until we build out our additional couple dispensaries there. In Pennsylvania, it's somewhat similar, I would say, because we're more of a wholesaler selling into 90% of the 80 or 90 odd dispensaries out there. There's definitely enough product to stock our own shelves, but in our 3 stores, we also carry top brands because, again, we're customer focused. We want to have all the complete line of products that the patients come to expect when they walk in an apothecarium dispensary in Pennsylvania. So it's a balancing act, but I'd say we're much more at this point on the wholesale side of the equation. We are looking, for example, in Pennsylvania, we have the ability, each provider has the ability to acquire up to 15 retail licenses. We currently have 3. So we would be looking to expand that balance over time. But at this point, we're more a wholesaler with 3 dispensaries. So, yeah.
Awesome. Thank you for that and the color there. Keith, I wanted to ask you this as, one of the few operators that has significant operations in Canada and the US. and you perhaps have a unique perspective on this. What were you looking, or what did the Terrascend team see in the U.S. That made them want to be early investors in the space? And what do you continue to see that you continue to allocate capital towards the U.S. market as opposed to the Canadian cannabis market?
Yeah, I think you rephrased the question well, Andrew, because I wasn't here at the time, but having established a pretty close relationship with Jason Wild in my relatively short time here, and having an appreciation for the history, I think that they just quickly recognized the growth potential of the U.S. market relative to the Canadian market, and I think we're decisive in terms of reorganizing the company to pave the way to enter into the U.S. And so you could call some of it fortuitous. I think some of it was also wise and visionary to foresee that the way things are unfolding. But clearly, to the second part of your question, as you look forward from today forward, for those that are well positioned in the most attractive states, it's definitely an extremely exciting place to be. So I think for us, it's sticking to our strategy, which is really depth versus breadth, and carefully and thoughtfully considering expansion opportunities when appropriate and when they present themselves. And so that's really kind of our outlook. Is you look at states like New Jersey, like Pennsylvania, and like the rest of the Northeast corridor, and I think you see a very attractive runway over the coming years. And then you couple that with the regulatory environment that we talked about, with really the winds kind of blowing in one direction there over time. And I think that it's a very attractive situation.
Thank you for that. Just responding to an emailed question now, and I would also point out that we've got just a little over 3 minutes here. The emailed question was, given your personal background, Keith, in the CPG space, how do you see the cannabis market maturing to look like some of these more traditional CPG companies that we see, or do you not see it going there?
No, I do. I see it going there. I think it'll happen over time, and right now. And so companies have to have well thought through strategies in terms of sequencing and executing on the various planks of the strategy. But right now, it's attractive to be a wholesaler. There's a lot of just in terms of profitability and in terms of the dynamics. But over time, that will shift and either to retail banners, and we're really focusing on our Apothecarium brand name as a retail banner and building out that footprint across multiple states. But then I do believe over time, to your point, to the question, brands also will become important. So we have, for example, our Valhalla product brand that will be that started in California, and we'll be launching in Canada. That could extend into other states as well. We have our Alera brand, which is very much favored by patients in Pennsylvania. And so over time, we'll continue to focus on that. And I think the key players across the industry are also focused on building brands. So that will be a winning formula over time. Excellent.
Keith, I just want to extend a thank you very much for joining us today and for presenting. We really appreciate your responses to the questions, and we continue to appreciate the engagement from the audience here. So just extending our thank you to you for joining us today.
Thank you.
Awesome. And now we'll just pause for just a moment as we queue up our next presenter. And sorry for the delay here, folks. We're just trying to get our next presenter queued up on video. We'll be next for a moment here.